You have an overweight recommendation on Coca-Cola, $66 price target, but it's getting harder to raise prices in this environment. Doesn't it put that price target and recommendation at risk?
It doesn't. The recommendation of Coke, frankly, hasn't had much to do with pricing at all, other than the fact that there has been more pricing power in this business, and I think anybody would have believed could have been the case if you think back 5 years ago. But today, it's the health of the Coke system, the entire franchise system, the brands, all the marketing that's been put behind it, that the business has been able to earn the right to price. As we look forward into 2024, as James just said on the video you played, a more normalized rate of pricing, something in the 3.5% range. Even that, is just a healthy degree of price driven by package mix, by assortment, and markets where there's still going to be some inflation, even if it's at a much lower rate than what we've recently been experiencing.
Are you happy with what Coca-Cola has been delivering in terms of cash flow? Because they spun off the bottling operations in the middle part of last decade. That was supposed to boost margins. And there's a sense that cash flow has exceeded net income only in a handful of quarters for the last 5 years, which is not really a net positive. Could they be doing more on that front?
Actually, it's funny. I actually see it as the opposite, right? That there's been actually a tremendous amount of constructive change from the standpoint of free cash conversion. They've been doing a much better job converting their earnings to cash. We've seen tremendous strides made in working capital in particular. But that journey to continue refranchising, as they call it, the bottling, is continuing. They've talked about their quote is they want to be the world's smallest bottler. And actually looking into the 2024 forecast, there is another 2-point headwind to the bottom line. I think it's 4 to 5 points to the top line from some of the refranchising work, particularly actually in Southeast Asia, that's going to continue to impact the P&L. But that journey to a more franchise-like model where you see that higher cash conversion, higher operating margin leverage is very much in play.